Welcome, welcome, welcome to the Home Loans Network powered by Loan Factory. I am your host as well as loan officer and mentor, Ebony Biko. And I want to welcome you back to my podcast. In this particular episode, I am going to talk about the Rocket, meaning Rocket Mortgage, and Compass Real Estate, how it shifts with Redfin's seller control policy and the 0.4% pricing edge, meaning this is the future of real estate in a strategic way for realtors as well as buyers. If this is your first time tuning in, I'm Ebony Biko with over 25 years experience within the mortgage and real estate industry. So if you're a first-time home buyer and you're wondering when is the right time to move, this podcast is for you. And this particular show is definitely for you. If you're a real estate investor and you're thinking scaling and you was kind of hesitant on it, guess what? This is the right episode for you. And if you are a realtor trying to stay ahead in the market that's constantly ever so changing and how you can be ahead of the curve, then of course this podcast is for you. You are not here by accident listening to me, because what you're seeing right now and what you're hearing is not about rates under no circumstances. It's not just about house cycling, meaning just one house after another, but the deal doesn't go through or doesn't make sense. It is about structural evolution and how real estate is marketed, how it's financed, and how it's positioned. So it's up to you three different individuals, the realtor, the real estate investor, and a first-time home buyer, for you to be able to understand and how to structure deals early on so you can continue to grow. So what I'm going to do is break down the Rocket and Compass Alliance, Redfin's updated seller's choice policy, and how this differs from Zillow and Trulia. Also, I'm going to talk about the 0.4% pricing improvements that's available through my relationship with the Loan Factory and Rocket Mortgage, and how this will create real opportunities for my first-time home buyers, my real estate investors, and my wonderful realtors. So let's talk about where the market is heading right now. So let me start off with Rocket and Redfin initially announced an acquisition back in March of 2025, March 10th, 2025, right? So what that did was that put them in a situation where Rocket had agreed to buy Redfin in a stock deal worth around $1.7 billion. Now, Rocket and Redfin, so this just giving you a little history. Rocket and Redfin did a merger around July 1st, 2025. Now, the Rocket companies, what they did was they completed the acquisition of Redfin. So who is Redfin? Redfin is like the competitor, Redfin is the competitor for Trulia and Zillow and Homes.com, places like that, right? Redfin was always one of the top websites, whereas home buyers or even real estate investors would go to turn around and look for properties, right? So let's fast forward. February 26, 2026, Compass and Rocket formed a partnership to bring Compass listings to Redfin and integrated with the Rocket mortgage offerings. I'm going to explain this, okay? So when Rocket companies and Compass announced a 3-year strategic alliance design to expand listing visibility and better connect search, agent representation, and mortgage financing, this is what happens. Compass was able to get exclusive listings, meaning listings that is not available yet on Trulia or Zillow. So most of the times when, let's say you have a property that's listed for sale, that property more than likely had to be listed on the MLS database, right? The way, and once it's listed on the MLS database, then from there it is syndicated to a lot of these different websites, meaning, even realtor websites such as like a Coldwell Banker, Century 21. So they're syndicated to so many different platforms as a whole, which of course includes the Zillow, the Trulia. Okay, now the difference is with Compass exclusive listings, it will hit the Compass and Redfin sites before it actually hit the other platforms, such as the including like the coming soon or private exclusive inventory. This will gain a broader exposure through Redfin. So what that means is buyers will see more properties or more inventory on Redfin before they even come available, and that gives the buyers the edge to put an offer on a contract without having to worry about potentially bidding. And as you know about bidding is like, if you have to bid with so many people when it comes to a property, you almost feel like, I give up. This might as well be an auction, because now I'm about to overpay potentially for a property because there's so many offers on it. And of course, as a real estate agent, they have to accept all offers and present all offers to the seller, and then the seller comes back and say highest and best offer. So now you're competing with, Lord knows, you have no clue who. So that's the difference. Now, the way it's set up now, because of the Compass and Redfin's relationship, you will be able to have coming soon listings before it's even listed, syndicated publicly on other platforms. Same thing with the private exclusive inventory. Now, the reason why this is important is because the inventory controls the equal opportunity control. What that means is you have a better chance to put an offer on a property without having to bid and overpay. Now, Redfin's seller choice policy allows the seller more flexibility in how and when their listings appear online. Listings do not have to follow the rigid multiple listing services timing rules that traditionally dictated your syndication. This is as a seller. So this is a huge advantage for a seller. Now, what this actually means is sellers can introduce inventory strategically. Agents can control the exposure timing. Buyers gain earlier access. Now, remember, these are buyers that is on the Redfin site, okay? And not just on a Redfin site, but on a Compass real estate site, because remember, they are now in partnership with one another. Now, so let's talk about how, in addition to that, so there's talking about listing agents, how listing agents will receive prioritized inquiries. I want to now compare the difference between Zillow and Trulia. So Zillow and Trulia actually operates primarily as listing aggregators. They require broad MLS syndication when properties are publicly marketed. They monetize through lead routing and advertising. So buyers' inquiries are often redirected. Now, let me explain what this means to you in simple terms. When a property in a listing is submitted to the MLS and posted on the MLS as a realtor, those properties get syndicated to a lot of different platforms. So of course it makes it watered down for you, right? If you're a buyer and you really want this property. Now, what happens is with the Compass and Rocket alignment is much different. It integrates visibility with financing collaboration. It connects exposure with mortgage structure, which means that mortgage person that's with Rocket Mortgage or that's with Loan Factory can pretty much look at their property, see you, and look at your credit profile and your profile as a whole, and be able to make, I'm not going to say create a deal, but customize it much easily where it works for you. And then you have that pre-approval already in hand. It makes it easier for you to shop and not lose a property, because you have to go find a loan officer to get a pre-approval. And the longer it takes you to find a loan officer to get a pre-approval, you are potentially losing time and potentially can lose that property. So this is good for you, because now as a buyer, it connects you with more exposure with mortgage structure. As a seller, it's going to bring you more qualified buyers. And because it's going to bring you more qualified buyers, even as a seller, you're not hoping and praying and wishing up on stars in a magic trick that you get a buyer who's qualified just to find out that they're a window shopper. So it basically is bringing the puzzle together. It really creates coordination, and coordination creates leverage. So this is not any type of incremental change. This is a directional change, which is huge for the realtor, for the buyer, as well as the seller. Now, I'm a loan officer, just so you know, like I said, with Loan Factory, right? So Loan Factory is, we're a broker platform. So we work with multiple lenders, including Rocket Mortgage. But because of Loan Factory's wholesale relationship and corresponding relationship with Rocket Mortgage, I actually originate Rocket loans through our broker channel. The reason why this is critical and why this is important is because, see, I have access to the Rocket pricing, unlike other companies. Dealing with me is like almost dealing with an actual Rocket Mortgage loan officer, with the exception of I have all of Rocket Mortgage rates along with my 240 plus other lenders rates. Now, I can structure loans strategically. Doing business with someone like me, or just as a mortgage broker as a whole, and not just me, but as a mortgage broker as a whole, you generally are not just another loan application. Like, you are your name. Like, whoever you are your name. That is very important. I don't want to be known as an ID number or an application number. I want you to know exactly who I am. So for me, I'm not confined to a retail single lender model under no circumstances. What I do is focus on positioning, not just quoting, and getting this deal done. So through this relationship, eligible borrowers with Rocket Mortgage may qualify for up to 0.4% additional pricing improvement. So let's make this real. Let me explain what that means. Every mortgage rate has a cost tied to it. So don't ever think that it does not. Doesn't matter what lender you go to. Every rate that you get, every loan that you get, every credit card that you get, it doesn't matter. It is tied to some form of a cost. Okay. So let me give you some examples. A 0.4% pricing improvement reduces that cost by 0.40% of the total loan amount. This is what that equates to. $400,000 loan that equates to $1,600 credit. A $500,000 loan that equates to $2,000 credit. $750,000 loan that equates to $3,000 credit, and a $1 million loan that equates to a $4,000 credit to you as the borrower, as the buyer. Why that's important, and it may or may not seem like anything, is because look at it this way. Let's just say, hypothetically speaking, you're a first-time home buyer. You are eligible for down payment assistance should you decide to go that route, or how about this? Or the seller's willing to contribute towards your closing costs. So let's say the seller's willing to contribute 3% towards your closing costs, or 2% towards your closing costs, right? So in addition to that 3%, the seller is willing to contribute towards your closing costs. Let's say we're looking at $400,000. If we're looking at the $400,000 range and the seller's willing to contribute 3% towards your closing costs, well, that's $12,000 they're willing to contribute towards your closing costs, plus that additional $1,600, which is the 0.40% that I was telling you about. Okay. So when you look at the $12,000 plus the $1,600, that's $13,600 that is credited towards your closing costs. So take that into consideration. Now, this improvement does not automatically lower the rate. It improves the closing costs that's attached to the rate, meaning what you have to bring to closing. So this creates flexibility. This creates a flexible power when it comes to your deal. Now, for first-time home buyers, I want to give you a good example right now. So many first-time home buyers are sitting on the sidelines and they're like waiting for the conditions to improve. There are no perfect conditions when it's time to buy. If you like the property, get the freaking property. Simple as that. There are strategic positions though. So I'll give you a good example of one of my clients. So I had a client. She was buying her first home for $475,000. The loan amount was $427,500. But with that 0.4% improvement, that came out to be $1,710 credit. That $1,710 was able to, however she saw fit, but reduce cash to close, offset closing costs, preserve emergency reserves, because you should always have emergency reserves, as well as really just covered inspections and a minor repairs. And what I mean covered inspections, because let's say, you was to get a homeowner's inspection and get an appraisal, things like that. Well, that could have been $1,700 right there. So it's like it's reimbursing you. So look at it that way. Instead of just draining your savings, you can keep your capital. And that's what she was able to do. She was able to keep some of her money. Now let's multiply that by rising inventory and assets through Redfin exposures. So because of that, with the Redfin exposures, listen, my client had more listings that they can look at, earlier access, and a deal that was structured correctly. This combination creates an increased confidence, not you worrying about, do I have the money to close? Or, is the seller going to accept my offer? Is there a lot of people competing? Or, do I have a buyer that is qualified? No. Confidence allows the buyer to act while others hesitate. Historically, those who move during transition periods build the strongest long-term equity positions. So, with that being said, as a buyer, this is huge for you, because you don't have to worry about trying to figure out, okay, is there any good loan officers out there having to do your research or anything like that? No, once you're looking on the compass of the Redfin website, you can use, and I'm going to emphasize this, you can use your own lender. You can use your own mortgage broker. Don't ever think that you cannot. But that more than likely, if they're on that website, not only they're reputable, they're vetted, and I'm not saying others not. So let me emphasize that to the fullest. But the thing is, everything works hand in hand. When it comes to business, just like they say, it takes a village to raise a child, and it's your first time buying a property, or even if you're a real estate investor trying to grow, it takes a team to make your deal go through. And if your team is on the same page and they're working together, it makes your deal go through effortlessly. Now let's talk about my real estate investors, because see, investors, they think slightly different. They understand cycles that create windows. So I'll give you another good example. Like I had a real estate investor who purchased a $900,000 property, right? So, this was a 3-unit that he purchased here in Chicago. Loan amount was $720,000. Now with that 0.4% improvements, that was $2,880 of a credit that went back to him. Now, if he acquires 4 more properties in 2 years, that is basically over $11,000 preserved. Now remember, he's a real estate investor. $11,000 may not seem like it's nothing, but hey, depending upon the properties you buy, that could be 2 or 3 earnest monies, down payments. That can be, all of your different inspections, because real estate investors' inspections tends to be slightly different depending upon the type of property that they're purchasing. Now, with that preserved capital, he was basically able to, fund renovations, increase his DSCR position, which is debt service coverage ratios, right? That makes it easier for him to stabilize the building that he purchased for the purpose of putting tenants in there to increase the income for the purpose of refinancing. Okay, so refinancing out of it. It also, the reality is it reduces leverage stress. So when you start layering an expanded inventory, the visibility from compass listings on Redfin, it increases your opportunity to grow as not just a buyer, but the real estate investor. Inventory assets plus structured financing equals acquisition speeds. Acquisition speeds equals portfolio growth. Portfolio growth, to be honest with you, equals a possible increase in your longevity legacy real estate investment. It is not about compounding, but it's about being strategically, financially knowledgeable. And this is why I'm giving you this information right now. Now, when it comes to my realtors, like if you're a Compass agent, if you're a Compass real estate agent, this alliance strengthens your listing exposures. Exclusive inventory visibility give you a huge differentiations, right? Now, let's add structure when it comes to mortgaging your position. First of all, you're going to be able to write cleaner offers, meaning you know that your person is already pre-approved. You know that they're vetted, whether it's through Rocket, whether it's through Loan Factory, who will vet them through Rocket Mortgage. Reduce appraisal stresses, because depending upon the type of deal that it is, it might go through desktop underwriting, or if it goes through the desktop underwriting, well, the benefit with that is, guess what? Your deal is closing much faster because it went through an automated underwriting process, which versus a true manual old-fashioned underwriting, because, it is what it is. It's called life, right? So this will actually help you speed up the process and go on to the next deal, but still give your buyer A1 service. Now, this for you will provide a professional leverage, because see, if you're outside Compass, I need you to pay attention to this, okay? If you an agent and you're not with Compass, your listing still will get syndicated traditionally through, the MLS, to Zillow, to Trulia, and to Redfin. Understand that, so don't ever think it's not. But you do not control early exclusive exposures in the same way. You do not benefit from the coordinated financing alignment within the alliance. However, you can still differentiate through structured financing. And if you are interested in learning about structured financing as a real estate agent, please do not hesitate to reach out to me. I can always assist you. I am licensed only in 11 states, so I still will assist you, but I just wouldn't be doing it alone, but I can definitely refer you out. Now, one of the reasons why it's important, honestly, just as a whole, to work with me or even get to know someone like me, because I'm going to teach you and tell you what you should be looking for if I'm not licensed in your state, and should you decide not to use someone like me if I am licensed in your state. That's number one. But when you bring structured pricing and structured deals, guess what? You strengthen your negotiating position regardless of which brokerage that you are with. So differentiation actually comes from the structure, not just the marketing. When it comes to real estate, and I need you to understand this and I need you to visualize this, real estate growth over the next decade will not be random. It will only favor those that understand visibility shifts, control capital efficiency, structure financing. This is really important. So the Rocket and Compass alignment increases that exposure. Redfin seller choice policy increase control. The 0.4% pricing improvement increases flexibility. Visibility plus control plus flexibility is going to equal leverage. Leverage builds what? Wealth. So the urgency is not about rushing. The urgency is about positioning before the next expansion phase accelerate. Positioning yourself to make sure that your financing is in order, and positioning yourself that you don't feel like you have to rush for any deal, but you was able to get the best deal and see the deals available before it actually truly hit the public market. So look at it that way. So look at the Compass and the Redfin partnership as a way to say, hey, I see private exclusive listings before it's made available to the public. But no, you're not paying extra fees just to get exclusive private listings up front. It's just about being on the right platform with the right group, and then even working with the right mortgage company or loan officer. So what makes me different, I do not operate as a rate quote loan officer under no circumstances. I operate as a mortgage strategist. So through Loan Factory, I assess Rocket Mortgage via the wholesale channel. What that does is, outside of the other 240 plus lenders I work with, right? Rocket Mortgage actually allows me the pricing flexibility, the structure positioning, the contract alignment, and the portfolio scalability for my real estate investors, my buyers, and as a whole, providing the true support that is needed for my realtors. With over 25 years experience within the mortgage and real estate industry, as a lender, underwriter, real estate investor, and even as a realtor, I understand how small pricing adjustments influence large financial structures. Structure is what wins, and having the right team together is extremely important, because that definitely will make you a winner. And right now, structure and a team matters more than anything. So if you are a first-time home buyer, real estate investor, or a realtor, and you want to position yourself intelligently in a market that is ever so consistently changing, and you need to stay ahead of the game, and you don't want to keep overpaying or feel like, you just drain losing deals, let's connect. Let's connect. Feel free to, send me an inbox message on any one of my platforms, which will be listed in the description. You can find me on YouTube. I have 2 different channels on YouTube, one specifically for real estate investors. The other one is for first-time home buyers. The same thing with my TikToks. I have 2 different TikToks. Then I have my Instagram, my Facebook. You can also find me on Bigger Pockets. And like I said, all of that information will be in the description of the platform. You can also feel free to schedule a one-on-one strategy session with me, whether you're a real estate investor, whether you're a realtor, or whether you're a first-time home buyer, to ask me any of your mortgage questions that you may actually have. Outside of that, if you have any scenarios that you want to run by me, I am more than happy to assist you. If you're looking for a referral, I am more than happy to assist you. Because when it comes to real estate growth, it is not just about one person. It is not about like just constantly trying to research and, trying to figure out the answer. It's about team efforts and, giving real information. And that's what I try to do. So I will say this. If you want to position yourself to grow your real estate business, make sure you schedule a one-on-one with me or send me an inbox message and ask all of the questions that you have. Until then, I will see you in the next episode with Ebony Beco of Home Loans Network, powered by Loan Factory.